afternoon, everybody. So let's have a look at today's agenda. Yep, so we're looking at the purchasing module and basically all the functionality that's available within that. So if you look at the agenda, as there it is, blanket agreements, purchase orders, and all the way down to purchase reporting. And then, of course, at the end, we're also going to talk about the Visa B2B integrated purchasing workflows. So to start with, we will look at the blanket agreements functionality. So what are blanket agreements? They're basically a long-term arrangement that you have with your supplier, and particularly if you're looking at a purchase blanket agreement, you could have a sales blanket agreement as well, and that functionality basically works the same, but on the sales side. So it's basically a long-term arrangement for supplier with a supplier for supply of items or provision of services over a set period of time with predefined terms and conditions. And so it can also help you in terms of forecasting your purchasing and cash flow, as well as you can even use it to drive some of your MRP and purchasing decisions. So let's have a look at that in the system. So I'll switch back to SAP Business One. And so under purchasing, you have the purchase blanket agreement. And so when we open up this screen, it's actually opening up in find mode, but let's go into add to create a new one. So what you have, obviously the usual things, your supplier code, your supplier name, but there is this agreement method, and there's two options here. You can either do it as an items method, which means that the agreement is around specific products, or you can do it as a monetary method, which means that the agreement is all around dollar value of purchases over a given period. And let's start by looking at the items method. And so you have a start date, and then you have an end date. So however long this particular agreement is to run for, so let's say for the next 6 months, for example. You can tag a business partner project if you want to. There could be a reference number from the supplier, as well as a description of this particular agreement. So you put that in, and then you have the various tabs going across where there's further information you need to record about the agreement. So the first one here is the agreement type. And so it can either be general or specific. And the main difference is that if you select general, then it is not using the prices defined in the blanket agreement. Whereas if you use specific, then the prices that you define in the agreement are also in play. So this then overrides any other pricing hierarchy that may be in play. So if you've got any special prices, these get overridden by the blanket agreement pricing. You can define a different payment term for the agreement. So, if you leave this blank, then it'll just use whatever the supplier's payment terms are. But if you do select something, that's what gets used. Same thing with the payment method, shipping types. And then you can put some general remarks about the agreement. And then you do have some statuses as well. So initially when you're creating, you start as a draft, and then you can approve it. And then once you've approved it, then there's a few other statuses as well. You can also tag the system to remind you X number of days before this there's the end date of the agreement, so that you can then decide what you want to do around it, whether you want to renew it or something. And that will come through as an alert in your messages and alerts. And then in the end, the details is where you put in the products that are, going to be considered as part of or included as part of this agreement. So we can go in, let's say, enter a couple of items in. You can then say what quantities you're expecting to purchase on this agreement, and the price. So this price here, whatever price you put in here is what then gets loaded into the purchase order. right? And as you can see, as you set this up, you've got a total value of the agreement as well, and a total quantity. Some of these other columns, they're all grayed out. You don't fill them out, but as you progress through the various stages and raise purchase orders and things against this agreement, those fields will update. You can put a comment in there as well. You can also have some sort of an allowance of returns percentages. Now, this is just an overall number. Then what happens is when you double click on the line, you can then go in and put in a quantity value on various cycles, right? And this is the bit that will feed into MRP. So if you kind of say, monthly, and then, let's say from today till plus 1 month, and then you can put in a quantity of whatever that quantity may be, and then the warehouse and some free tax. And then this tick box is very important. So here, if you've got a forecast in your MRP, does this quantity consume the forecast in that period, or is this quantity on top of the forecast? So that's that kind of helps you manage that process as well around MRP. And then you can also tag activities against various periods. So what else we got there? So this tab here again gets populated as you transact. Attachments, this is where you can put in any specific contracts and documentation in relation to this agreement. And then you can, of course, also create recurring transactions. So for example, recurring purchase orders and so on, linked to this particular blanket agreement. And I won't do that either. So I mean, I've got a couple of ones that I've already created, so I might go and look at those rather than updating this. So if I go back in here and I look at the last blanket agreement, so this one was an items method and it was specific, and you can see the status is approved. But if I drop that list down, I can see that I can also put this agreement on hold if I need to make a change. So right now, while it's approved, nothing can be changed. But once I go put it on hold, I can modify it. I can, oops, got some alerts. I can go and, actually I need to hit the update button. And then I can go in and change things if I need to, and then I have to put it back as approved. Oh, and if for whatever reason you have terminate the contract, then you just change the status to terminate it. Okay, so let's have a look at then the details. So this is where you can see the product on the agreement, the quantity that was agreed. You can see how much has been ordered already. So we've already ordered 9 on this contract so far out of the 120, and we've got 5 that we've already received or have been invoiced, right? So this open quantity of 115 is basically 120 there minus 5, which is 115, and it's also showing some dollar amounts based on that as well. Then if you look at the Documents tab, you can see where all these things are coming from. There's a purchase order. In fact, there are 3 purchase orders of various quantities, 5, 7, 2. There is an AP invoice and a goods receipt PO, right? So the 9 that are showing as open are based on these 2 purchase orders that we have created. And then the 5 that's already been received is there. And if I wanted to see if there was a breakdown in terms of when the various deliveries need to happen, I double click on the line and I can see that's the schedule, right? So there's all the different dates, the quantities, and the planned warehouse, and I haven't marked any of these to be consuming the forecast. So how do you then raise a purchase order for this blanket agreement? There's actually 3 different ways of doing it. The first is you can just go directly from the blanket agreement and copy it to, and let's say I copy it to a purchase order. And that basically loads the purchase order on screen with, by default, the quantity that's still left on the agreement. I can amend that quantity if I wanted to. You'll notice the price has come through from the agreement. And then the other thing you'll see is there's a column here called blanket agreement number, and it's also linked to there. So that's how you link it. And the other thing you can see is the price source. The price is coming from the blanket agreement. So if you ever went into SAP, made this column visible, you would see whether the price was a normal price, a special price, a blanket agreement, or manually keyed in. So that's one way of doing it. The other way of doing it would be if you opened up the purchase order screen, pick the supplier, and then you do a copy from blanket agreement, and then it'll list all the open blanket agreements for this particular customer. Then you can select and select the specific lines you want to draw in. And it results in the same thing. It assigns it to the blanket agreement. Now, the third thing, and this is where you have to be careful if you've got blanket agreements running, if you just select the customer and select an item where a blanket agreement is applicable, you can see it gives you a message saying related agreement is linked. And down here, you'll see the agreement number. So there's a few different ways of getting to the same thing. And so let's say I put in a quantity of 6 against this purchase order. So if we remember, we had our agreement here. The agreement is showing a planned quantity of 120, cumulative 9. And we have 6 lines in here. Once I add this particular purchase order, and if we go back and look at refresh the agreement, you can see the extra line has come through. And in here as well, you'll see that the cumulative quantity has been increased. If I go back and look at my agreement, and if I look at the relationship map, what I'll notice is there is an option here to pick related blanket agreements, and then you can see which blanket agreement this was linked back to. So that's if you have an agreement that is of type items method. I've got another example here, which is a monetary method. So pretty much everything else is the same, apart from the details. And in here, you just have a planned amount, dollar value. But what you also can define is under this agreement, is there a discount applicable, right? So whatever is your normal price for any product, this discount 5% off is applicable. You can still also do a frequency and set amounts by period, and then you can't, of course, copy this to a purchase order in this case. But what you have to do always is go into the purchase order, select the supplier, and then when you put items through, it automatically assigns the 5% discount that what we saw earlier. It still says the price source is a blanket agreement, and it also still links the blanket agreement to the transaction. And if we look at the documents, you can see all the various documents that have been created under this agreement. And so that could be any item. It doesn't have to be a specific item, but you can see that the discount is applying. So they're the two sort of methods as far as blanket agreements are concerned. And on top of that, there are a bunch of reports under purchasing reports, blanket agreement fulfillment. And here you can sort of run and see what the status of that agreement is against what was planned. And I do believe that there is also an output crystal report that can show you some further details. I mean, you could, in theory, customize this to send to your supplier or customer to show them what the status of the agreement is. So that was on a items method one. If you look at a monetary method one, then that kind of shows you the monetary method one as well. Okay, so we'll move on to the next topic for today, which is purchase orders. I mean, we've already opened up a purchase order screen, but if you were to start entering a purchase order directly from scratch, so pick the supplier and go in and pick some items. And let's put in some quantities. And so the price has come through. What you'll also notice is there's some special pricing, or the special pricing is coming from the blanket agreement. But if I say, for instance, pick a different supplier, then what do I do? Let me just start again. Purchase order. Let's do Ocean Computers. And in this case, it's just coming from the active price list. So let's do the same thing here again. So of course you can also do the things like, right click and check the available to promise to see, what's on order, who is it on, what purchase orders are there. That's all sort of standard functionality available on the sales and purchasing screens. You can also right click and do a, where are we? On the price field itself, if you right click, you can do a price report, and that kind of shows you where the price, which price list it's coming from. You can right click on the price field and look at the last prices. So this is quite useful when you're raising a purchase order and you want to see what you've paid for this item in the past. So this is where I can see a history, what I've been paying in the past, what I've paid now. I can also see if I've bought this from someone else, what pricing I've been charged from other suppliers only. If other suppliers we've purchased from, what pricing have they charged? So this is kind of useful to get some further insight into the product and what's been happening. So we've raised the purchase order, and then, as you know, once you've sent the purchase order to the supplier, and then they'll ship the goods. So when they ship the goods arrive. You might have a scanning system and you'll receive it through a scanning system, or you might do it manually, but whatever way you do it, when you receipt, you will then convert that purchase order into a goods receipt PO. So the ordered quantity against the item. So when you've raised a purchase order, you'll see in the item master data, there'll be an ordered quantity. This, any open purchase orders would contribute to this number. As soon as you receipt it, it then takes those quantities and puts them into stock. So that's what I'm going to do here. But let me say partially receive one line, and let's remove one of the lines altogether. Right. So these are the 3 lines we are receiving. And if I hit the add button. And so that's now receipted that particular quantities. And if I go back and look at my purchase order, you can see 2 of the lines are closed, 2 of the lines are still open, and I can see the open quantities. One thing I also should mention is that if the product has been set up with dimensional information and weights and such, you can go in and look at the weight and volume calculation, and you can see what the total weight and volume of this particular purchase order is going to be. So it could be helpful in you planning your containers and so on. So we've done the receipt, and then of course you then convert that into an accounts payable invoice to update the supplier's account, and that then at some point you'll pay the supplier. But as part of this process, then you've done your purchase order, you've done your goods receipt, you're doing your accounts payable invoice. And then the next step that will happen is you'll do your landed costing, right? So that kind of happens. You can do the landed costs immediately after having done your goods receipt POs, but you can also do it a bit later on once you've done the accounts payable invoice. But it's important that if you are using landed costs, that you do that before you start selling the goods, because it's part of a revaluation process. So the other thing, before we switch to landed costs, the other thing worth mentioning is that, of course, on purchasing, you can also do service type purchase orders where you just put a description. It could be any sort of service that you're getting. So if I go in and put in, so let's say, I don't know, some sort of spare parts or something. So you can put in a description and then put in an amount. So that's service type, and then that follows the same path. You convert that purchase order into a receipt and then an AP invoice. So back to the topic of landed costs. So under purchasing and landed costs, we can now go in and pick our supplier. So we have our supplier Oceans Computers, and then we say copy from goods receipt PO. So this will show me all the goods receipt POs where I haven't done a landed cost. I pick one of those, and then it loads up the various items. And what you'll notice is that there is a duty amount that the system is recommending. Now, where is this coming from? So there's a bit of setup involved. So when you are setting up the item, if you know what the estimated duty rate is, you can assign that on the item master data. So then when you're doing your landed costs, the system will do an estimation. Now, it doesn't necessarily have to be accurate, because when the goods arrive, the customs people may use a different valuation to calculate the value of your stock. So it may slightly vary, and you can then change that. So let me just put in the broker, whoever's going to do the customs clearance for me. That's the broker, that's the supplier. Let's say the actual duty was $100. And because it's different, it's asking what I want to do. And yeah, I will divide it proportionally to the different rows where it's applicable. When the third item doesn't have any duty, it's duty free, so nothing went against that, but these two items got updated proportionally. Then we have the costs. So these are the various cost elements that you in your business have got in terms of additional costs for bringing inventory in from overseas. And so there's a setup screen under administration, setup, purchasing, landed costs. And in here, you can define all the different elements that are applicable. And you can also define how those elements are to be spread across the various items. Right, and so it's up to you how you want to spread them. So the options are cash value, quantity, rate, volume, or equally. So let's say I had insurance worth $300, and my shipping cost was $340. And then I also had some storage costs once the goods arrived. So that now $740 will get spread evenly, or not evenly, but based on whatever mechanism we've selected here, those will get spread across individual items. So the item cost is $245 in this case. We had per unit, we had duty of X dollars, $16, and then the additional cost of $57. So the landed cost in the warehouse was $318. And so that's how landed costs works. And if I then do a journal entry preview on this, you can see that it's posting one part to increase the value of my inventory, and then the other to go into a clearing account, which then gets offsetted against the invoices from the customs agent. So let's add this So now we've created the landed cost. Now, as I said, the last part is to then match that to the supply invoice against the clearing account. You can also do that by going into the accounts payable invoice, pick your agent, and then you can do a copy from landed cost and pick the invoice in question. And you'll see all the lines in there, and you can go finish. So that'll load the amounts up. The tax codes are not assigned, so generally, these things may be tax-free. So you could say, let's say P2. Let's say that's also P2, tax-free. Let's say the storage does have some tax on it, VAT, GST, and then customs is also P2. What you also find is in most cases with these things, there is an element of GST. So you can go in and then put the tax on import account, and then you can say, whatever that amount is. So before I do that, let's put a date in because it won't show the tax until that happens. So currently there's only $10 tax on this, but generally there's a tax element there, and let's say there's another $500 of tax. And so what I do is I say the gross up amount is 5,000, and that will automatically then calculate in Australia at least 10%. So that gives us another $500, and that's how you complete this invoice from the supplier. Okay, so let's move on to the next topic in here, which is freight charges. So freight charges work similarly. So if you have a purchase order where the supplier is actually charging you the freight, so you can go in, pick the item, and then at the header level, you can define the various charges you might have. So freight, insurance. Again, this is all set up. So administration, setup, general, and freight. We can have the various types of charges, and you can also define the accounts that they post to. You can see how it gets distributed. And then you can also say whether those charges affect the inventory valuation or not. Right? That's quite important, because what happens is if I go in here and say I've got freight of $40, and I did say that it affects inventory, right? So what happens is, let me just add this purchase order. At the time of the goods receipt, because I'm saying it affects inventory, it basically takes the $40 and puts it against my inventory value, right? And the other side goes into some sort of a freight clearing account, which then gets cleared off later anyway. But if I had set this up to say it doesn't affect inventory, then you'll see a slightly different posting. Instead of it going into inventory, it will go into expenses, and that will happen when you post the accounts payable invoice. So it's something to worth consider if you are applying freight, whether you wanted to uplift the value of your inventory. Okay. We're moving along. The next topic we're looking at is the purchase requisitions. So fairly straightforward. If you've got people in this organization, you don't want them to raise purchase orders, but you want to allow them to request something, that's the purchase request. So it's a step before you even do a purchase order. And they can go in and do it for items or services. They can put in the product, their requisitioning. By default, the system will bring up the supplier that's in the system, but if you notice, it's not at the header level. So this person can be requesting multiple products that could be from different suppliers. They can put in a required date and then a required quantity, and that's all they need to do. and you know, as you are aware, in SAP Business One, you can also have approval workflows. In this case, the approvals kicked in, and it's asking me to send this document to approve. And so I can say, please approve. And then depending on who the approving party is in the organization, that person will get a message saying there's been a request for an approval. And there it is. I've got a pop-up message here saying requesting document for approval. Me as an approver, I mean, in this case, I've just made myself the approver, but you know, in reality, you'd be someone else. You can review that. You can approve. And look, I mean, this is just an example of what you can do with approvals. It doesn't have to be with purchase requests. It can be with purchase orders. It can be with accounts payable invoices. All depends on the business process. So I've approved it. The person requesting gets a message back saying it's been approved. They can then add it as a normal request. And then we'll have a, you know, whoever is then responsible for acting on this purchase request can then convert these into either a purchase quotation, because you've never purchased this and now you need to find some pricing, or turn it into a purchase order. And then, as you can see, it didn't bring up the supplier, because, you know, it's up to you now as the purchasing person to decide who to buy it from. So that's the purchase requisition process. The purchase quote, I've sort of alluded to it before, is the next step, which is where you go to a supplier and say, tell me how much you're going to sell this to me for, or what's the price for this item. And you can, of course, manually create a purchase request. It just looks like a purchase order, but you know, there's some additional fields in here. You can say what the required date is. You can also then put in the required quantity. What happens is then when you get the quote back, you can then say what date it was quoted and what price they gave you. So that's how this purchase quotations work. But I mean, in this case, we're doing it as a one-off, but you can also use the purchase quotation generation wizard. And it's quite useful, because what you have is under your item master purchasing data, you have your default supplier, and you can have a bunch of other suppliers, right? So what happens is when you run that purchase quotation generation wizard, it will look at all of those. And let me run one now. So it's a new parameter, and let's call it PQ, and based on items. So I can then say, when is it required by? In 10 days, and it's valid for 30 days. And I'll pick my item which has got some suppliers on it, and then I can say I need a quote for 150 units. So I go next, and this now shows me the different suppliers. Now, what if the supplier that I'm trying to get this from is not listed? Well, what I can do is I can just change this to group by item. I can go in and add a row. I can select the item in, and I can then select a different supplier and say, I also want to raise a request to this supplier for a quote. Go through next. What's happened here? Sorry, I should be highlighting all the lines. And next. And that's showing me all the purchase requests it's going to raise, and I execute that. We should end up with 4 purchase quotes. And the neat thing is, even though there are 4 unique quotations created, each of them is linked to the same group number. So they're all linked to group number 6. So I can easily go in and say, show me what have I done? Yeah, show me everything that's in group number 6, and I can see it there. So what happens then is, as those quotes come back from the suppliers, you go in and update it. You can say, yep, I received the quote today. They quoted me for the 150 that I said, and their price was $250. Or I might have someone else. The next one quoted me, let's say they quoted me tomorrow. And they quoted also for 150, and their price was 300. The next guy quoted me tomorrow as well, and they quoted me, let's say, they said, well, you can buy 200 and I'll give it to you for $200. Update, and let's say the third guy hasn't responded. So you can update all this, and then if you want to look at what quotes you've got back, you can run the purchase quotation comparison report. We had our group number 6, and there's all the different ones. So you can see the first guy, no update. The second guy, there's the price, and it's highlighting the ones which has the highest or the best price, but then you can also see that the quoted quantity was much higher. So you now have to make a decision on whether you want to call them up and say, hey, I only wanted 150, can you still do the same price, or go to the other supplier. And once you've selected the one you're going to proceed with, you can click on the Create Purchase Order button. And it's also asking you, do you want to close all the other purchase quotations in the same group because you've made a decision? I'll say yes. And now it's created a new purchase order, and the rest of them have been closed off. So if I go into my purchase order, and if I look at the last one, there it is. There's the $200 that I had. Okay. Moving along to, so in terms of actual flow, if you started at a purchase request, you could convert that into a purchase quotation if you really wanted to. Add that. And let's say you then convert it into a purchase order. And you can go through the rest of the process. And as you're going through that flow, the relationship map is going to maintain all those various links all the way to the accounts payable invoice. As you can also see that when your purchase request is converted into a purchase order, the person who's created that request also gets an alert saying that's happened. Okay, so the last couple of topics need to cover is the concept of reserve invoices and down payment invoices and when to use which one. So, in most cases, when you're buying product, you're going to raise the purchase order. So once you've raised the purchase order, the supplier may expect you to pay the full amount upfront, particularly if you're importing. And when those goods are shipped, you already take ownership of the product even before the goods arrive. Well, in that case, you should be using the reserve invoice process, because what happens is the reserve invoice allows you to pay for that full amount, and also it reflects the value of that inventory in your general ledger as a goods in transit asset account. So you create the reserve invoice, you pay the reserve invoice, and then you convert that into a goods receipt PO. That's the sort of reverse flow around a goods receipt PO. So if I look at a relationship map there, you can see it's purchase order, reserve invoice, goods receipt PO. So you mostly use this if you're doing imports and you need to pay for the full amount before the goods leave, and you need to reflect that amount in your balance sheet as goods in transit. The other way of making prepayments or payments before goods arrive is using the concept of down payment invoices. And the way this works is, and the main difference there is that you're able to make a partial payment rather than a full payment amount. So let's say there's a shipment of $2,000 and the supplier is expecting us to pay 50% of that upfront. So we go into down payment invoice. we pick the supplier, we pick the purchase order, and we load that into a down payment invoice. And then in here, we can say what percentage we need to pay. So let's maybe the supplier is asking us to pay 60%. So we create a down payment invoice for 60%. And then, of course, you can go through the normal process of paying that down payment invoice. So going into banking, outgoing payment, and it's that one there. Let's say it's being paid. So we've paid the down payment invoice. And then what happens is when you convert that goods receipt, I'll skip the goods receiving step. I'll go straight to the AP invoice. When you post the AP invoice, it recognizes that there was a percentage of down payment. You can also view it. Make sure you're happy with what's being allocated. And then you can add it. So you can see the balance due is a smaller amount now because it's taken up some of that down payment. And then you basically complete the accounts payable invoice from there. And look, you can have multiple down payment invoices as well against this original purchase order. That's also possible. So maybe you do a 60%, then another 20%. As far as the accounting is concerned, the down payment goes into a prepayments account and then gets cleared out of that when you do the AP invoice. All right, so we're now on to the final topic, which is some of the reporting. So I should point out that this dashboard that I've got in the background, this is a BOEM dashboard. This is if you've got B1 up, B1 usability, there are a bunch of standard dashboards that come, and this is one of those that I've got here. Other reporting around purchasing, things like, very handy, and you guys probably know about this already, what open items list helps you look at what open purchase quotations, what open purchase orders there are, what goods receipts are there that haven't been converted into an AP invoice, and so on. So you can see all of those fairly easily. And then if you wanted to see some purchasing history, you can go into the purchase analysis, and then you can see, what purchasing you've done by supplier, what purchasing you've done by product. You can even do by product, by supplier if you wanted to, and so on. So this is a pretty powerful report, the purchase analysis one. And then, of course, with BOEM dashboards, you've also got all these different things that are available for you. I think that at this point, I'm going to hand over to Chris to talk to us about the Visa B2B integrated. So let me change presenters now. Chris, over to you.
Hey, thank you. Just going to share my screen. Please let me know when you can see that.
Yep.
Cool. Thanks, guys. My name's Chris. I'm from Visa in the B2B space. I've been at Visa for about 2 years now. And one of the main things that I've been charged with and my wider team is working more in the B2B space and seeing how we can get more people using their corporate or business cards to pay for their payables. And one thing that we found that was key was the ability to meet people where they actually make their payments, and that's in their places like SAP. So the reason that we built these products is supply pressures are impacting enterprises for a few reasons. The pressure from suppliers can be under short payment windows, which can result in inefficient cash flow management and limited time frames. There's varied payment preferences from suppliers, which brings up potential inconsistency and errors across systems. A lot of laborious manual processing when it comes to check or bank transfer or cash. And the final one is limited card payment acceptance. So what that then leads to is enterprises have to pay with cash on hand, And then enterprises actually, because they do that, don't enjoy the benefits that come from using commercial cards like working capital. Now we've released a product where you can pay with your commercial cards to all suppliers within the SAP platform. So what's really key to this is that you can pay both card accepting suppliers and suppliers who do not accept card payments, and you never have to leave the SAP platform. It's a native module that doesn't require you to go onto a new screen or anything like that, or to move away from the platform. It can be done through your existing setup. And the way that it does this is through a product called VBIP. Excuse the acronyms, we tend to love those here at Visa, but what it basically means, if we go left to right, is you select the invoices that you want to be paid by card. Our Visa B2B integrated payments product is like a gateway on the SAP platform that will allow you guys, the buyers, to leverage commercial card capabilities to make those payments to the suppliers. So it will provision a virtual card, a once-off virtual card, and it will pay a card accepting merchant. So let's say you have a supplier who supplies you with your stationery, they accept card. If they're a normal card accepting supplier, they'll just be paid by the normal card rails. If they are not a card accepting supplier, you can still use that card, because part of this process, we have something called a BPSP. Again, another acronym. All you need to know is that a BPSP takes a card payment and it turns it into an EFT transaction. So as far as the supplier is concerned, they don't accept card and they still get a bank transfer into their bank account, or EFT transfer into their bank account, but you've actually paid it by card. So this solves the problem of needing to figure out who accepts what. Our product allows you to pay anyone you like by card. So what is our B2B integrated payments? It's built through our Asia Pacific hub, and you can pay with a Visa commercial card within the SAP ERP, regardless of the supplier card's acceptance status, as I said. You can complete payments to reconciliation within the ERP, eliminating the need to switch to other platforms or to upload or download data. You can extend payment terms up to 55 days. That depends on your specific bank issuer, but generally 55 days for both card accepting and card non-accepting suppliers. So you can make use of that working capital benefit. And you can monitor payment reconciliation status directly within the platform. There's no additional fees for existing card accepting suppliers. Install first, enhance operational efficiency, and enjoy the extended credit terms. If you've got an existing Visa corporate card, you can load that on, and if you don't, you can speak to your issuer to get a Visa card. So the benefit of this is you can pay, track, and reconcile all the payments all in one place, which is your B1 platform. You can consolidate your workflows because you can pay cards to any supplier, reduces any repeated or laborious manual tasks like automated financial reconciliation, eliminates the need to send, process, and record checks and bank transfers, make better business decisions every day. A unified real-time view of all the outgoing payments gives you a more accurate view of cash flow. And you can upgrade and optimize existing solutions. So VBIP, which is the product that allows for this, simplifies and optimizes how you use B1 and equips your teams with better ways of working. So they won't need to learn any new software because it is a native integration once you download the SDK, and it basically is just part of your payment flow as any other. After a really short initial setup, you won't need to go out anywhere else. And that's it.